much money do I need to start trading options? This is one of the questions I get asked most often by people exploring options for the first time, and the answer might surprise you. So if you're thinking about buying options for the first time, you're in the right place, because that is the question I'm going to answer for you in today's video. And make sure you stick around till the end, and I'll show you an easy way you can start practicing trading options that is completely free. This is such a great question. Understanding how much money you need to start trading options is absolutely crucial, because it can help you make sure you have your ducks in a row before you start trading options, and it can also help you understand what kind of risks are involved with trading options. And don't worry, if you don't have a ton of experience or money right now, I'll show you some quick tips on how you can start practicing trading options completely risk-free, that doesn't take any money, and you can have fun while you learn. So stick around to the end of this video for that. My name is Davidson, and over the past 20 years, I've taught tens of thousands of people how to trade stocks and options with discipline and confidence. And today I'm going to show you a quick rundown of the basics to help you get started trading options, and how much money I believe you need to start trading options successfully. Now, before diving into options trading, it's important to understand the basics. Options are contracts. Now, this is just a blank piece of paper, but I want you to picture and imagine in your mind that this is a contract. And these options contracts gives the buyer of the contract the right, but not the obligation, to buy or sell the underlying stock at a predetermined price called the strike price on or before a predetermined date called the date of expiration. Now, there's two kinds of contracts. There are call options that gives the buyer of the contract the right to purchase the stock, to buy the underlying stocks. When I say call, I want you to think buy. And when I say put, I want you to think sell, because a put option gives the buyer of the contract the right, but not the obligation, to sell the underlying asset. So calls give us the right to buy, puts can give us the right to sell, and these contracts can be bought and sold for a fraction of the price of the underlying stock. And in a moment, we're going to look at some stocks, some very popular stocks you might be interested in, at a variety of different price ranges, from very expensive stocks all the way down to very inexpensive stocks. And we'll look at the options contracts and see how much they cost to buy or sell. Now, options contracts can be bought and sold at will on or before the expiration date here in the US. And so we're going to learn how these options contracts can give us a lot of choices on how we can trade and invest. Now, options trading can be incredibly exciting, but options trading can also be a double-edged sword. The benefits include the potential for really high rates of return, and we get a lot of flexibility with the kind of strategies we can use. However, on the flip side of the coin, options have significant risk, because these contracts do expire, and because they give us leverage, it's easy for us to bite off more than we can chew. So before we go look at these popular stocks, it's important that you understand that there's two sides to every coin, that options give us leverage, and if we're going to use leverage, we have to learn how to use it intelligently. Now, as promised, we're going to show you a couple of popular stocks out there. These are not advertisements to buy or sell any of these stocks or these options. I just want to show you how the pricing works. I'm going to start out with Apple, obviously a very popular company. Their last traded price was at $226 per share. Their stock's been in an uptrend, kind of rocketing up. And you could control 100 shares of the stock. The full cash price for 100 shares, it would be $22,634 at the current price to control 100 shares of the stock. Now, the reason I say 100 shares is because that is how much an options contract controls. 100 shares. And what you're about to see here should excite you. You could control Apple stock for the next 39 days at the strike price of $2.25, just a little bit less than the current price, for as low as $8.85 per share. So again, 100 shares times $8.85 is just $885. Okay, you could control that option a little bit longer term for the next 102 days out until October. And the same $2.25 strike price would cost you for the call option. Again, I'm looking with the call options. Would cost you, again, for 100 shares times $13.45 per share. That would cost you $1,345. And out here, to control that stock for the next 193 days, you could lay out for the $225 strike price about $1,910. So again, 100 shares times $19 per share. I'm going to round that off just to make that quick. Again, about $1,900. Now, so you can see it brings the cost of trading way, way, way down. And Apple's a little bit more expensive stock. Now, there are way more expensive stocks than Apple, but there are a lot less expensive stocks than Apple. So I'm going to show you another stock that is of interest right now. A lot of people are talking about Palantir, P-L-T-R, Palantir. These guys make facial recognition software, and they're a defense contractor. And their stock is trading around $27.23 per share. And we could look at the strike price, the $27 strike price for August. 39 days is just $243. And for $243, again, $2.43 per share times 100 shares, you could control Palantir for the next 39 days. If you wanted to go out to October, buy a little bit more time, that same $27 strike price, again, for the call options, would be $3.35 per share, so you could control that for $335. And to go all the way out to January, $193 per share, $27 strike price on that call option would cost you $475 to control 100 shares in a contract. So you can see that it's possible to trade options for just a couple $100. Now, that being said, in my opinion, I think you need to have at least $2,000 to $3,000. And the reason I say a minimum of $2,000 to $3,000 is because you're not going to win every trade, and you need to be able to withstand some of the losses and drawdowns. Now, if we were to let the options expire worthless, we could lose the entire amount of the option contract that we buy, the purchase price of the contract. But we can also use stop losses on those options contracts and sell them if we're not getting the outcome we desired. And so we can really limit the downside with a $2,000 to $3,000 account minimum. You can withstand the expense trades, or what we call losing trades, expense trades. I don't like to use the word loser because that's not the right mindset. But if you can pull together $5K to $10K, now you're cooking with Crisco, and it would be easier for you to withstand some drawdowns. It would be easier for you to trade a little bit more expensive stocks so you don't get relegated to just trading cheap stocks. And if you have 10K plus, maybe you have tens of thousands of dollars, or you get out to where you have the hundreds of thousands of dollars, you're in great shape for trading options. And I've had students come to me with millions of dollars, but it doesn't matter where you're getting started. One of the best answers is, look, if you can scrape together at least 2 to 3K, and in a perfect world, 5 to 10K, you can get started trading options the right way without overextending yourself and without taking on too much risk. So there you have it, folks. You can get started trading options for just a couple $1,000s. The more money you have, the easier it is to get started, because you are going to have losing trades, but you're also going to have winning trades. And we want to be able to withstand any possible drawdowns, and we need to learn how to control and mitigate that downside risk, because we're learning how to use leverage. And leverage is one of the keys to growing wealth. You just need to learn how to use it intelligently. Now, There are a lot of great trading platforms out there, and if you want to get started trading options without any money, and you want to learn how to trade options risk-free, you want to get a virtual trading account and start practicing in a virtual trading platform. They're sometimes called paper money. My personal favorite platform, the one I just showed you, is the Think or Swim trading platform owned by Charles Schwab now. And there are other great trading platforms out there. Our international students love the interactive trading platform, and there are other popular trading platforms out there like Tasty Trade and E-Trade and a bunch of others. Make sure that the brokerage you choose specializes in options and that they have very competitive commissions. You should be able to negotiate those commissions down to about $1 per contract without a ticket fee, and some of the brokerage platforms out there will give you zero cost commissions on exiting your options trades. If you like this video, make sure you hit that like button, subscribe, and hit that notification bell so you can get to our other videos. And of course, you can always come hang out with us over at the Cashflow Academy, where we make learning how to trade options fun, simple, and real.